Hi, hello, good afternoon. Welcome to your daily outlook for gold. I'm sorry that it's been a little bit late for the daily outlook to be sent. I was doing some, sorting some sort of stuffs in here. So here's the thing: a daily closing really nice, a strong bearish close. Finally, trading below that area of support. We tried the best we could. And finally, a breakout, a continuation that made a lot of sense for the 1933. Basically, that was the target for today. In this area here, for our candles, we have a little bit of a structure here. And from the left-hand side, we still, have plenty of reactions in this area here and far, far away from this level, another, heavy areas of contention here. So what's the idea? As you can see here, these plenty of contention 1933. Yes, we want to see that continuation to the downside because we trade what we see and not what we think. And what we see here is a plain and simple bearish moves. Especially this daily took ages for that daily to give that kind of continuation below that area of support. We were looking continuation this morning, basically below this area here, right? Price hesitated a lot for, to give that continuation to the downside to the point that we wasted our bullets kind of earlier than the 10 a.m. and the 10 a.m. was, like nobody was watching at that point, and the move happened quite easy and a lot of volume there. So what is the stuff that makes sense in here? What makes sense is a friendly pullback. What is the area of a maximum pullback at this point? We don't have in this area a structure here near these areas, plain and simple cream traffic. The structure we have is from the left-hand side. This around these 1940s, a good key level, but as you can see in this area here, we show you this area here, that's a good contention area for that continuation to the downside. So you can see price, already broke this area below that support, that previous area of resistance was a clean break, went to the 1933, which was the area that made a lot of sense this morning to target this 1933. Now, here's the thing. We tend to have clean moves in this area here, and this is where I want you guys to pay attention on. This little zone in here, that's 1936, let's say. Therefore, if for any reason today we have a 15-minute candle closing outside this area and the very next candle break that high, most likely we're gonna see a correction in price, something that can go to the 1940 with enough momentum there. And the most dangerous and the most delicate zone in here will be the 1943, this area here. Basically, once price is leaving that previous area of resistance, then this easily can be used as a secondary structure. We're not gonna see most likely this level. We're not gonna see this level for the rest of the week or the month, basically. This can be very straightforward because the 1930 is always a pain in. It's a very strong level. Let's put it that way. This 1930 is a very strong level. Tomorrow we have more fundamentals. Friday we have NFP, obviously. So we're gonna be, very aware that anything that can give us a close below this 1933 can technically give us another hit to the 1930. And once price goes to the 1930, be more than done with any trade that you're holding, because at that level, I'm expecting a lot of rejections here. So what is the stuff that makes sense overnight and for the rest of the session is a friendly pullback, friendly pullback that can happen even as a form of fake out to the 1940 and this area here, heavy resistance zone for that continuation to this area here. Obviously, it's not that easy to sell this area. It's not that easy to sell this 1933 to the 1930 for only 30 pips. Then planning later on short positions from this area here. Once you have fake outs, once you have enough information there, like 2 15-minute candles overnight that can give you confirmation of resistance from those levels, this can be a nice area to look for a possible continuation to the downside, and overall target can be the 1930. Like I said, obviously, there's a lot of things that needs to happen. For example, another retest for that push to happen. Obviously, what you need in here is another retest of the daily high, because this area here, that's already your daily high. That area is the previous reaction you got. As you can see in the 50-minute candles here, the reaction looks pretty simple, very easy. But I'm not expecting this gonna be it for the daily high. Most likely we're gonna push a little bit more, even to the confirmation of resistance on the 50-minute candle somewhere here to the 1938. And once you have this kind of volume, the fake out and everything there, you don't need to be the first one looking for that continuation, neither the last one, meaning you don't want to start selling when prices are already in the 1931, knowing that you have a 1930 as a psychological levels very strong. I'm not going to be surprised if even, from now on, prices start rallying, and then on Friday we come back to that level there, retest that 1930, and ASAP get out of that level because it's a strong area of rejection and support that can be really strong in this area here. So the idea is simple, expect some sort of moves to the 1938 or even to the 1940, look for continuation to the downside. I don't want, to be honest, I don't want to be a breakout trader below this area here, like a 50-minute candle closing below the 33 to that 30. I need a lot of volume. Maybe tomorrow, if we get, some sort of moves overnight toward this area here, let's say we miss the move from the 1940 to the 1933 or to the 1930, that's okay. We'll have the option tomorrow with the news, whatever. We're going to see a continuation to the downside, most likely, depending, obviously, what price can give you here. As you can see here, the 4-hour candle here doesn't have a bottom wick, and it's very odd. It's crazy, but sometimes you have those nice daily closing, beautiful daily closing, and like I said yesterday on the daily outlook, be careful, because if the daily tends to open with gap to the upside or even no bottom wick, it's dangerous, right? To just buy the low, the opening of the daily. But if the daily low is being retested and rejected, that daily can give you plenty of options there to the upside. So be aware of that. In this area, the 50-minute candle already created a kind of a fake out here, right? This area here already created that fake out. As you can see, that previous reaction is playing exactly in the same way. What happened if, right? If you want to look for a move to the upside as a counter trader, not that I recommend being a counter trader, but if you have any form of reaction from the 1935, which is a key level here, and all you have is a long wick from the downside, and you see that price is creating bullish candle, something like this, for example, something like this area here, that's your 35, that's a previous area of the structure. If you get a formal 50-minute candle rejecting heavily here, and later on you have another candle closing like this, that's your confirmation of support. What do you need? A friendly pullback to retest the low of that candle there. And when price is leaving that high, you can play the odds. And this area here is the most dangerous area. Like, let's say you take a position from the 1936.50, even 1937. Price goes to the 1938, and in that specific area, price is giving you something like this, for example, like a fake move to the upside first, and the next candle close below this area. That's your clue. That's your first piece of information that the move to the downside is the one that makes more sense. And once price is retesting that level, giving you a body of the candle closing below that area, you know that at that point, yes, you can trade below that area with this piece of information here, and with the confirmation of resistance there, and the overall picture can be going to the 1930. Don't be surprised, and this is the only reason I think there's a good chance that we're gonna retest the 1930 even overnight. It's because tomorrow we have a pre-New York session. We have news for GDP. There's a 7 a.m. in the morning that can create a little bit of volatility in the market, and that can be a fake move to the downside there, like price going to the 1930 and all of a sudden rejecting there, even though gold and US dollar is not, doesn't need any correlation with GBP. But the only thing that you can expect at that point is that people getting scared from GBP, they will try to look for any stability, any safe haven to have a better chance, to hold their positions. And that can create a little bit more of appetite, a little bit more of volume on gold, and to the point that price can go to the 1930 and then 1930 reject, and from there start rallying even for tomorrow and pre-NFP, and then NFP may be a correction in price. But overall, coming to NFP, most of the times you're gonna have, plain and simple range, meaning that price can stay in this 1940, 1930 ranging here pre-NFP, or a plain and simple rejection from that 1930 because it's a strong close back in the range and rallies overnight, and tomorrow we may pull back all the way up to the 1950, but we need information for that. At least you need 2 4-hour candles there that can create support and the confirmation of support. London is the one that you have to be very careful with the with the volume that we're going to have for London, because we have news at 7 a.m. in the morning, New York time. So that can create a little bit more of volatility on gold, pre-market open for the New York session. That's going to be pretty much for now. Like I said, the idea is simple. Look for a retest, fake outs, whatever, even if the fake out's coming from that area. All you need is 2 15-minute candles and the third candle breaking the low, so you can look for that continuation to the 1930. If the chances are very, very high as well, if you get 2 4-hour candles here closing bullish and you have the option to target the 1940, then you can give it a try. It's less risk, because at that point you are counter trending something that is looking really strong and really easy to the downside. The same thing that happened this morning with the NYSE volume. We tried, those buys over there didn't work out quite easy because we were counter trending the 4-hour candle from New York volume, and that was pretty much it. That's you already know the rest of the story. But as you can see here, that weekly candle is looking Gucci for a possible continuation still. There's a lot of things that can be done overnight, so don't hold positions overnight. Don't play the odds, with high volume here if you don't have enough information. The best information is the one that comes after the 9 p.m. close, which is the first 4-hour candle closing. Then what you need is a friendly pullback 9:30, and look for the continuation wherever price is going for the 9:30. Most of the time 9:30 create more volume in the market, anywhere from 9:30 to 9:45. And if you get 20 pips in there, be done with it. Don't hold position, because at the 10 p.m. can correct the whole move again. So it's very dangerous. Trading during Asian session is very delicate. It's very dangerous because you tend to have very, very small moves. Lately, Asian session has been doing quite nice, I will say, based on volume and the clean move that we're getting during Asian session, but it's not every day. So don't play the odds at that point. That's gonna be pretty much for now. Please stay safe, take care, and I will see you guys tomorrow for another New Year's streaming.